Hey, my name's James Nicholson and welcome to my channel. It's been a few weeks since we have done one of these videos, the latest interest rates. Now, this video is a great one because there are so many new rates, better rates than the last time we did this. Now, the video in the corner that you can see in the corner might be a little jerky. I've made a big mistake of updating my MacBook to the beta software that's coming out of the new software that they have, the Fandangle software they're coming out in September. I went for the beta software. It's not working great with my computer. So the slides, they might have a few second delay going through, but the audio should be fine. We've tested that. So I wanted to still do it this way because I think this way is the easiest to do it. There's not lots of fast moving stuff here. And so I think you get what you need. And that is the good rates on the interest rate market at the moment. So what's been happening over the last few weeks is that rates have been going down. Normally they go down because maybe the Bank of England dropped the rate, or the rate that the bank that you borrow from, what their rate is that they achieve. So they might go to JP Morgan Chase and get a lower rate. That's called a swap rate. Now the swap rates haven't really gone down. Rates have dropped significantly in the last week or so. There's a bit of a price war at the moment, and that is because the market is slow at the moment. So it's good for us. They did this in January as well. Doesn't mean it will continue, but well, it is. Let's get some good rates. So before we jump into this, as always, if you haven't done it already, and you want to know about content like this, do smash subscribe down there and hit that bell notification. I've got new content every single day about the property market, investing in property. You can see my latest project that I'm working on. I'm going to go and unload a load of tiles to the builder in a minute and much more besides. And while you're here, smash like or tickle the like button. Do something to the like button. That really helps with the YouTube algorithm and it gets more views on the content. So please could you do that? So first off, let's look at HMO mortgages. These are for house of multiple occupancy. Maybe if you've not heard of that, think of like student accommodation where you buy a property and you rent it out on a room by room basis. Mortgage Works is a great lender for this specialist kind of lending, and they haven't changed the rates on these this week. So the 5-year rate is 5.54, 3% fees. Loan to value, they'll lend you 75% of the value of the property. 2-year deal is 5.39 with 3% fees and 75% loan to value. Now, what they have cut this week though, and I think this probably might feed into the HMO rates in the coming weeks, but we'll see, is limited company buy-to-let mortgages. And if you buy a property today, you're going to buy one in the future, I highly recommend that you buy it through a limited company. That's the better tax efficient way. It's easier to sell it. It's also easier to pass it down to people that you might want to inherit your assets in the future. And so a buy-to-let with a limited company, the Mortgage Works has got some great rates. Both of these are down about 0.25%, which is great. The 5-year deal is at 5.29%, which is down from around 5.5%. The fees are 3%, loan to value 75%, as always. 2-year deal is down just below that 5% mark now, which is good at 4.99%, which is decreased. The fees on this are 3%, loan to value 75%. Now, on limited company mortgages, they are always a little bit more expensive, but still, it's worth investing this way because it's way more tax efficient. Go and check out, if you want to know why, I've got tons of videos on that on the channel, so do a search on the channel and you'll see some of those. So, buy-to-let in your personal name. This is how most people historically have done this. So most properties on buy-to-let, probably 95% of them, because it's been going on for decades, are in people's personal names. NatWest is decreased the rates. We talked about this. They cut rates twice in a week the other day, which was great. Their 5-year deal is at 4.44%, getting close to being under 4% now, which is good. The fees much more reasonable on this, 9.95 and 75% loan to value. So that's a solid deal. Now, the 2-year deal is at 4.82%. Again, cut is decreased. It's less than 5% now. 995 on the fees, 75% loan to value. Now, here's one thing that's going to happen. Whenever I say NatWest, sometimes if you approach them directly, they don't let people do buy-to-let directly. If that happens, and that's the case, go to a broker. All brokers will have access to NatWest if they're a whole market broker. So you might need to go for a broker. I always would go for a broker myself. I think that's the best way to do business. They just get everything organised for you. Now, an observation here is the 5-year deal is significantly cheaper than the 2-year deal. That's because their expectation is that rates are going to drop in the next couple of years, and they want to lock you in for longer on a better rate, but they want to have you as a customer for longer. So they're giving a better deal. That really indicates where they see the market going, just in case you're thinking, are rates going to come down or go up or sideways or whatever, right? So that's interesting to see where they're putting the market there. Residential mortgages. Barclays has been in the news a couple of times in the last week for cutting rates as well. Santander have cut rates as well. Both of these are down, which is great news for everybody. 5-year deal is 4.24%. That is a decrease again, and we're getting close to being under 4% now, which is really, really positive stuff. Fee of 999, and they'll lend you. This is based off that you've got 25% equity in the property or a 25% deposit, depending if you're remortgaging or if you're buying a new property. The 2-year deal is with Santander. That's at 4.72%, which is also a decrease as well, which is really positive as well. Lots of rates now under 5%, which is really good. 999 in fees, 75% loan to value. So these are big high street lenders. They've both been in the news in the last week for cutting rates. So one to watch and one to maybe apply for yourself if you're looking for a mortgage at the moment. Barclays are really trying to get a foothold in the market and get lots of business in at the moment, it seems, because they're the best on small deposit residential mortgages. So these are rates when you've got 10% deposit. So a 10% deposit. Barclays have got the best 5-year deal at 4.75%, which is a decrease. 999 in fees, 90% loan to value. Not a bad deal. 2-year deal is with Virgin Money. It's just over 5% at 5.19%. Again, it's a decrease. That's great for everybody. And 995 in the fees, 90% loan to value. So this is a good week. Lots of deals have gone down. Maybe they will continue next week. It depends if it really gets an influx. Let's just say Barclays have got this cracking rate on at the moment. If they get such an influx of business, they might put rates up temporarily. Sometimes they do that to dissuade people applying for a period of time. So that could happen. But look, while the market and transaction volume is down, we could see some cuts in rates. We've got some good news from America this week. Their inflation data was better than expected. Now, people are saying that the Federal Reserve might cut rates 3 times, which could be interesting to see. So we'll keep an eye on all of that. Let me know if you've got any lenders that we should be looking at that we haven't covered in this week's video. I'd love to hear those. So do comment below with all of those. Do smash like, do subscribe to the channel and hit the bell notification. And check out all the other content on the channel, including this video that's just going to come up down here.